Hello, this is Matt on the Moon Family Sedan channel. Despite what many fearful analysts said this past November, the collapse of Ponzi scheme FTX will not set us back 5 to 10 years. In fact, if you're watching markets, it looks like the collapse of FTX set us back less than 2 months. The collapse of FTX Ponzi scheme, FTX now bankrupt, looks like it set back crypto, certainly in terms of price action, less than 2 months. And so, yes, markets could tank further, but at that point, it clearly wouldn't be due to FTX unless you're talking about like a contagion effect. But even if the contagion spreads, the idea of this holding us back 5 to 10 years, as many touted just 2 months ago, to me that had always seemed a bit absurd. And sure, there will be some, maybe, especially from the world of legacy finance, that'll make them a little bit more about jumping into crypto. But outside of that, market participants don't seem to agree with that scare narrative, doomsday prophecy, 5 to 10 years. No. And so, look, I do think we XRP holders missed out this past market cycle on a new all-time high due to the SEC. But XRP is about to become the only large cap coin in the world to have legal clarity. Look, the market is already heating up. So, no, we're not going to have to wait 10 years for a new all-time high. And look, I won't make price predictions. I never have, I never will. But wouldn't you be surprised if 5 years from now XRP hasn't hit a new all-time high? You listening? No, seriously, I mean that. Tell me, like, wouldn't you be surprised if by then it hadn't happened? I mean, because look, unless like a horrendous wildcard event occurs on a scale that we couldn't even imagine, if something like that happens, becomes reality, okay, fine. Outside of something like that, I don't see it. Because and then on top of that, we're already seeing reports of, if you're just looking at on-chain analytics, there are all sorts of metrics that are flashing, hey, pay attention to me, including you're seeing all sorts of whales buying a number of altcoins. It's business as usual. And so, yes, we XRP holders, we got the shaft. And the SEC came after Ripple, which effectively resulted in them coming after effectively XRP holders. But even though we did miss out on an all-time high this past market cycle, and I do think it's because of the SEC. And by the way, part of the reason I say this is because every other top 10 crypto by market cap, every single one of them hit a new all-time high compared to their previous cycle. XRP is the only one that didn't. But it still did rally. Like, it ran up to $2, and I was happy to see that at least. But it's because of the SEC, not because market participants wouldn't have otherwise valued it substantially higher. I think it's pretty clear what's going on here. What, the only one that didn't hit a new all-time high in the top 10 happened to be attacked by the SEC? Yeah, I think that matters. But from this point in time, I can't imagine not seeing things ramp up sooner than later, because you don't have bear markets forever. And by the way, in case you missed it, as of 2 days ago, we entered greed again for the first time in roughly 10 months. And then we slightly exited it yesterday. We were neutral at the Crypto Fear and Greed Index, but now we're back at it again. 55 out of 100 on the Crypto Fear and Greed Index. Market's feeling greedy right now, folks. So what do you actually need to watch big picture in terms of figuring out what's actually going to happen? Well, it's just a friendly reminder here. Crypto always has, and for the foreseeable future will continue to, perhaps for a really long time, or maybe it never changes, crypto does move in tandem with stocks. Moves in tandem. So, when you're looking at what's impacting stocks specifically, I mean, what do you think? What's impacting people's buying and selling? Well, look at this headline from Cointelegraph. This is the type of thing. It's not, and look, nothing is the end-all be-all when it comes to investing. There's all sorts of things, as I always say, that you need to consider, especially with crypto. There's technical analysis, fundamental analysis, on-chain analytics. And if you're talking short-term, it's interesting in looking at the sentiment on social media, which is effectively what the Crypto Fear and Greed Index looks at here. But like it or not, and I don't like it, what the Fed does has a tremendous impact on the global price of crypto. It just does, right? And again, I'm not convinced it's always going to be like that, but if you want to try and figure out what might be happening in the future, you need to be aware of what's happening with this. So look at this headline from Cointelegraph. U.S. government, $1.5 trillion debt interest will be equal to 3 times Bitcoin market cap in 2023. And this is really interesting because I'll tell you this, going through this article, basically what they're getting at is the idea that If you're the Fed, you're not going to be able to continue hiking interest rates forever. I think we'd probably pretty much would agree on that. But there's another consideration that not a ton of people are talking about, which is the degree to which it's impacting the amount of debt that is being paid on the interest in terms of actual dollars. Because as the rates go up and new debt is accrued, it's at higher interest rate levels. And I'm going to show you a chart in a second. It'll make your brain explode when you look at it, though. It's just disgusting how irresponsible the federal government is behaving from a monetary perspective. But this can't persist. Even in terms of dollars, even these reckless people running the country, just printing the dollar into oblivion. That's what they've done to this point. I don't believe that they're going to continue the quantitative tightening forever, meaning increasing interest rates. It's not something that's actually sustainable. And given that you've already seen interest year over year, although it's high, there's mega increase. I think the last number we saw was something like 6.5%. If you look from month to month, though, we're actually seeing a decline, which is the direction that you would want things to go and expect it to go. And this is important because as the Fed pivots, which they will, and I just don't pretend to know exactly when, but as that ends up happening, what you will see is a flood of money into stocks and crypto. And this is where we're at right now. So unless you get something where we enter some sort of horrendous recession, or even just a little bit of recession, to be honest with you, it doesn't have to be horrendous necessarily. I'll retract that, actually. Even if you enter a recession, okay, then you have a delayed effect. But also recall, recessions are not the end of the world. Recessions historically, on average, last what? I can't remember the exact number. You can just Google it if you're curious, but I think it's somewhere around a year. And most of them aren't the end of the world. So you don't have a complete destruction of economic output. You have a reduction to some certain degree. It may not even be monstrous. And then you start to go back to the upside. So that's what we're looking at. But this is what will ultimately drive what's happening in terms of price action for crypto and stocks. I think fundamentals are incredibly interesting when it comes to crypto. I think that in a mature market, they should matter substantially more and will. But right now, they don't, unfortunately. So when we check out this article, commentators believe that Bitcoin bulls do not need to wait long for the United States to start printing money again. The latest analysis of U.S. macroeconomic data has led one market strategist to predict quantitative tightening ending to avoid a catastrophic debt crisis. The U.S. Federal Reserve continues to remove liquidity from the financial system to fight inflation, reversing the years of COVID-era money printing. While interest rate hikes look set to continue declining in scope, some now believe that the Fed will soon have only one option: to halt the process altogether. Why the Fed will have no choice but to cut or risk a catastrophic debt crisis, Sven Hendrich, founder of Northman Trader, summarized on January 27th, quote, "Higher for longer is a fantasy not rooted in math reality," end quote. Hendrich uploaded a chart showing interest payments on current U.S. government expenditure now hurtling towards $1 trillion a year. A dizzying number. The interest comes from U.S. government debt being over $31 trillion, with the Fed printing trillions of dollars since March 2020. Since then, interest payments have increased by 42%, Hendrich noted. The phenomenon has not gone unnoticed elsewhere in crypto circles. Popular Twitter account Wall Street Silver compared the interest payments as a portion of U.S. tax revenue. Quote, U.S. paid $853 billion in interest for $31 trillion in debt in 2022, more than defense budget in 2023. If the Fed keeps rates at these levels or higher, we will be at $1.2 trillion to $1.5 trillion in interest paid on the debt. End quote. And here's the chart in question. Here, I'll make this a little bit bigger for you there. And so this chart, it's showing federal government current expenditures interest payments. It goes back to a little bit before 1950. And you can see, obviously, it's been increasing the whole time. But if you look right where I'm circling, for those of you who care to look at the screen, rocket to the upside. This is basically the beginning of 2022 right here as the rate hikes begin. So... look at that monstrous increase. So this is something that is, well, it's clearly not sustainable. But even with the government being as reckless as they are, Do you foresee them allowing that rocket to the upside in terms of the amount of straight up dollars actually paid to continue to rocket like that? Increasing, I mean, it's not going to happen. And so, and this is why, again, like being aware of this, it's not complex to understand. Eventually, the Fed, they are going to pivot. And in fact, frankly, you've already kind of seen the beginning phases of it, because you saw last year rate hike increases of 75 basis points. Well, last month, the increase was only 50 basis points. So you already see them going in the other direction here. So at the end of the month, January 30th, there's another meeting coming up here with the Fed, FOMC, and we'll see what they do. It could be 50 basis points, but who knows? Maybe it'll be 25 basis points. I don't think it's going to go straight to zero out of nowhere. That would be surprising anyway. But again, you can see the direction that we're going. So if we don't hit, if we don't have a notable economic downturn, meaning like some sort of notable recession, even if it's not horrendous, if we don't see that, like we are, even if you look cyclically in terms of how humans historically behave when it comes to purchasing crypto, we are in this phase where people are clearly accumulating. The bottom's already in then, if that's the case. And I always say again, and I think it's fair, unless there's a wild card event, the bottom's in, folks. That's what's most probable. Doesn't mean it's a guarantee. It's what's probable. And as cited here by Investopedia, they were talking about this concept back in October. In fact, I want to share just a small part of this. They wrote, there's a little subheading here, higher rates could mean more costly debt. The U.S. has borrowed heavily in recent years to address the pandemic and to facilitate major tax cuts. Now, as the Fed moves to combat inflation, the interest the government owes on public debt could jump. Since borrowing costs for the U.S. government rise and fall along with interest rates, and an increase in the federal funds rate to a predicted 4.6% by the end of 2023 could drastically increase the cost of debt. Now, folks, so they were on the right path by writing that. Again, that was October of this past year. And they're saying, well, if you hit 4.6% by the end of 2023, as I record this, we're at 4.25 to 4.5%. As of the end of 2022, not 2023. So look, fine, jack it up some more, and they probably will. It's not going to last forever, and especially if you can continue to see the direction shift, like especially once you get down to a 25 basis point increase, which is what I think is most probable at some point anyway. That's going to be a clear sign to market participants, and you know what that means? Because look, again, and the reason this is important, which I haven't articulated in this video, just to be clear, is the reason that they're hiking the interest rate is because inflation is out of control. So the reason this tamps down that is because in order to take out a loan, whether you're a person or a business, it's more costly, so fewer people do it. You're discouraging people to participate in the market effectively, decreasing the demand. So if you're decreasing demand, obviously, I mean, it doesn't take a rocket science to figure out what that means in terms of changing the direction of inflation. So that's the reason that they're doing this. They're trying to, basically, they're slowing down the economy intentionally, but they're not going to do this forever. So we're at a very exciting time, actually. And that's why I started the video by saying, look, when it comes to XRP, like, we're going to get ours. Like, it's going to, I firmly believe at some unknown point in the future, XRP is going to hit a new all-time high. And waiting 5 to 10 years, again, I don't make price predictions, but that would just be absolutely Looney Tunes land wacky to me. Unless you have some sort of catastrophic thing that makes us, although if something like that happens, we got bigger problems. We ain't going to be talking or worrying about crypto if you're talking about that. I don't even know what that would be. Asteroid hit Earth? I don't know. I'm just saying. So I don't think we have to worry about that. Interesting times ahead, but this is why I'm excited too. So like I recognize this. You don't have to be some sort of financial guru. The everyday person can understand this stuff and what's driving, well, not just crypto, I was going to say crypto, but really just markets more broadly speaking. And I know it's stupid and I don't like it, but it's the Fed. It's not solely the Fed, but my gosh, huge impact. If they were doing nothing, you could see what the market would actually just do in a vacuum where it's just the market participants, but they are doing stuff and it's impacting what market participants do heavily. So it is what it is. But, and it does make me a bit sick to my stomach that we didn't get a new all-time high for XRP this past market cycle. It really does. I was thinking about that more recently, and it really does bother me, actually. It bothers me more now for some reason than it did even a couple years ago. I don't know, it's just time letting everything sink in. But Because I really do firmly believe, if not for the SEC intervening the way that they did, attempting anyway to choose winners and losers in the free market, regulation by enforcement, other crap, I do think we would have seen that new all-time high. And again, one of the main reasons I firmly believe that is, well, you saw the impact when the SEC intervened, price plummeted. So obviously people are paying attention to that. That's a no-brainer. And then for XRP to then be the only top 10 crypto that didn't hit a new all-time high, like, come on. What was the low for Ethereum? Which, by the way, Ethereum and XRP were running neck and neck for much of the market cycle before that. In terms of market cap, where they topped, and they topped at different times, but where XRP and ETH topped, it was at about the same level in terms of dollars of market cap. Well, you didn't see that this market cycle. So how low did ETH go? What did it get down to, like $90 or something? $88, $90, $100? I can't remember exactly, but the point is it went from whatever that really low number was all the way up to almost $5,000. We did not see that for XRP, but the previous market cycle, they were running neck and neck, and we didn't see that this time. It's not like anything got worse for XRP all of a sudden. Everything got better. Everything else got better, other than the only bad thing was the SEC. Everything else got way better in terms of adoption and utility, everything, you name it. So what do you think's going on here? But that's also why I say, if we're really at a point, and I think we are, where market's heating up, and we're going to have clarity surrounding XRP from a legal perspective, the SEC v. Ripple case wrapping up, as long as we get a positive ruling for XRP holders, even if that means Ripple loses and has to pay a fine, as long as there's a path forward for XRP, that's a major win for us. So we could get a disastrous ruling, and we'll talk about it if it happens, but I don't think that's what's most probable. And at least Judge Annalisa Torres has made it very clear that she's very interested, seemingly very genuinely interested, in market participants outside of the case and how the SEC v. Ripple case is going to impact them. That's a really good sign. If she's really, and I think she is, genuinely getting to a point where she understands the totality of the XRP ecosystem effectively, I don't see how she doesn't approach her ruling in the SEC v. Ripple case in a way. I don't see how she couldn't approach it in a way that's going to protect or at least cause the most minimal harm for XRP holders themselves. So we'll see. Maybe that's wishful thinking, but I'm still optimistic. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.